In today's video, we're going to share the perfect investment for business owners, and then we're going to show you how to design that perfect investment to ensure it benefits you and your loved ones, not the advisor or the institution that they work for. Hello there, I'm Steve McClellan, the financial engineer, where we help you grow, control, and keep your hard-earned money instead of giving away to taxes, fees, losses, or the unknown. Now, I hope you know the answer to this question. What is your biggest asset? I'll give you a hint. When you look in the mirror, that's the answer. You are your biggest asset. And when you realize that, you need to start acting like it. Having your money work efficiently for you, where it's compounding year after year, never going down, no losses, is so important when you realize that you are your number one asset. And unfortunately, one of the biggest thieves trying to rob you from financial independence is taxes. Taxes are the number one reason why most will not reach or maintain financial independence. So, what do most business owners do to reduce these taxes? Well, we are told to incorporate, which makes sense, especially if we're past that starting phase and we're now in the growing or established phase of our business. Incorporating doesn't just protect you, but it also reduces the taxes on your profit. Corporations across Canada are taxed roughly at 12%, where employees are taxed anywhere from 24 to 54%. The problem is, the majority of business owners have expensive lifestyles. They got to pay for their mortgages, their fancy cars, their investments, their vehicles, and other expenses, leaving the majority of business owners wondering why they incorporate it all, because there is no profit. It's all leaving, crossing that imaginary line that is very real, where the government becomes your biggest business partner, taking anywhere from 24 to 54% anytime money leaves that corporation. Pretty crazy. You want to make sure you incorporate properly, where you have as many expenses coming out of your operating company as possible. This includes insurances such as disability, your health and dental benefits. You can have a health spending account. That will help reduce your incorporation taxes and get some money out of your incorporation tax-free. And there are a lot of other expenses you can have coming out of your operating company. Now, if you ever feel like you're going to sell your business, you also want to have a holding company. And that's where the majority of your investments should go, if not all of them. You also have to change your mindset. You need to follow the philosophy of the wealthy, where you pay yourself first, where you invest first. This is crucial. Now, the philosophy of the middle class is usually to spend first and invest what's left over. And I know what you're saying. You're a business owner. Does that even apply to me? Do I need to follow the philosophy of the wealthy? Yes, you do. Profit first. This is very crucial. The main question is then, what do I invest in? Now, I hope you remember the answer to this question. Out of this very diversified portfolio, where are you going to make most of your money? It's you. It's your business. Everything else complements you. But as a business owner, you are already putting a lot of risk into your business. You want an investment that grows, that goes up, that never goes down, so you can focus on your strengths, get even better, and make even more money. Now, what's the perfect investment? Which is the one that offers the green lights? And if you look through this list here, you'll be surprised, just like so many that are surprised in the financial industry. The perfect investment, especially for business owners, is a properly designed whole life policy. Whoa, wait, you're telling me a properly designed whole life policy is the perfect investment for business owners? Yes, it is. The problem is, it can also be one of the worst investments for a business owner. So let me show you an example. We're going to take a business owner who's 45 years old and they are earning $250,000 a year. Not too shabby. They're following the philosophy of the wealthy, where they're investing first and they're starting off small. They're only going to put 10% of their profits into their holding company, and then they're going to put this into a properly designed whole life policy eventually. But let's say they talk to someone else. They talked to an insurance person and they said, hey, I want to put 10% into this whole life policy. I heard it was good. That insurance person will generally take $25,000, put it into the whole life policy where there's no deposit option, put it in there for 20 years. And as you can see, there is some growth on that. After 20 years, after putting roughly 500,000 in there, there's a cash value of 679,000. Not too bad, with the death benefit of over $1.2 million. The advisor's happy. You're pretty happy. But maybe you went to an advisor that heard about the infinite banking concept or how to make these whole life policies a little more efficient. So they add a little bit to the deposit option, often referred to as paid up additions or the additional deposit option. Anyways, they're all the same, but roughly they take, instead of having that cost of insurance being $25,000 a year, it's now $15,000 a year, where you put roughly $9,639 into the deposit option. You can see now the cash values have actually grown quite a bit. Over 20 years after putting $500,000 in, you have a cash value of $759,000 with the death benefit of $1.45 million. But wait, we can get even better. You are working with an infinite banking practitioner that understands that you are a business owner, and sometimes business is good and sometimes business is not so good. So what they do is lower the cost of insurance and maximize your deposit option. Here, the cost of insurance is less than $3,000, allowing you to put $22,000 in a year. And as you can see, after 20 years, after putting $500,000 in, your cash value is now worth $844,000, where you got a 2.1 death benefit. Now, if you compare these side by side, over the long run, there's not really much difference between the cash value and the death benefits. The big difference is the cost each year. As I mentioned, as a business owners, we have good years and we have bad years. Sometimes we don't make as much money as we made the last year. Sometimes we don't make any money at all. Affording the $25,000 a year policy, where you must put $25,000 a year for 20 years, may not be affordable to everyone over those 20 years. Even the $15,000 might be a stretch, but surely you can afford the $3,000. When you're looking at this, what policy do you think is designed for the advisor, and what policy do you think is designed for the business owner? Big difference, not only to the advisor, but to you as well. You can actually even optimize this design even further, where that same person adding a term rider up to $2 million increases that deposit option to $98,000. So instead of thinking small, you can think really big and treat this like a retirement vehicle. You can also treat it where instead of borrowing from the banks or from a line of credit, or taken from your investments where you never have that cost, you can borrow from yourself, having that money continuously grow for you. There are lots of different ways to get to where you want to go. Unfortunately, a lot of times when you need the money is when the banks aren't there to help you, or your stock portfolio has taken a nosedive. Been there, done that. This is a way to make sure that you can reach your destination no matter what life throws at you. This picture here encompasses the positives and negatives of a properly designed whole life policy. As you can see, the growth is slow at first, but it gets that true, very tax efficient compound growth where the growth becomes exponential. From my experience, if you're looking at a risk versus return chart, this shows where a properly designed whole life policy fits. Very low risk with pretty darn good returns. If you'd like to learn more, click the link below and set up an appointment where we can help you grow, control, and keep your hard-earned money instead of giving away to taxes, fees, losses, or the unknown. Be healthy, be wealthy, be wise, push through the noise.